Well, I have to say, congratulations to everybody who's sat through all of these. I I think that all of our speakers so far have been great, and I'm really pleased that we were able to provide this information to you throughout the day. And again, thank you to San Bruno Cable for coming out and recording this, and they will be putting it up and in segments, as I understand it. Yeah, 4 segments. And you'll be able to watch it on YouTube. Local.
And also go to the city website, sanbruno.ca.gov, or go to rebuildingtogetherpeninsula.org. Within a week or so.
All right. So our fourth and final panel, Rebuild or Buy. We've got 3 speakers, Scott Goldie with a company called Brooks Street that's contracted with PG&E, and then Annie Oliva, who's a local realtor with Marshall Realty, and then Bob Castle, who's a CPA based in Oakland, who, again, we go way back with Bob to the Oakland fire, and he had a lot of clients whose homes burned in that disaster in 1991. And he has been a friend to our organization and promoted a book that we publish and distribute that's called the Disaster Recovery Handbook and Household Inventory Guide. And that's a little yellow-covered book that we gave away at the One Stop Center at the very beginning. And we still have copies of that book if anyone would like it. It's a general guide to the whole process. And we actually have a chapter of that book on tax considerations. There it is. So Bob has been a very helpful in getting the word out about that book over the years. So we've gone through the disclaimer in all the workshops, the fine print, just that we're here to give you information for educational purposes. So moving into the first slide, I'm going to frame this workshop. All I'm going to contribute here is going to be a few points to help you with the concepts of what are the factors that you should be considering when deciding, should I stay or should I go? Can I go through the process of construction here after everything else I've gone through? Or should I just cut my losses and sell and move out of the neighborhood where maybe I've lived for my whole life? So there's a lot of considerations, a lot of factors. I assembled a panel that I thought would shed light on those key issues, financial, logistical, and emotional. Next slide, please. So on the financials, you're thinking about how to maximize and preserve the value of your asset. For most people, their home is their most valuable asset. And so obviously the real estate market has been in flux over the last few years. So maximizing and preserving the value of your home is an important decision. Tax consequences, which Bob is going to talk about. As you all know, there are special rules for casualty losses, certain exemptions that you have. There is some buzz and an open question still about how the IRS is going to treat those initial cash amounts that were given in those 3 categories. And as I mentioned earlier at the last workshop, in addition to the forum that Jackie Spear held in December to shed light on what your tax situation is, the IRS, we did invite them to come today, and they assured us that they are going to be hosting their own event in your community to clarify further how they are going to be treating those payments, what the status of the legislation is that Jackie has introduced. And again, that information will help you make these decisions. I'm sorry, go back for 1 second. Available insurance, obviously, is a consideration for deciding whether to buy or rebuild. And then, of course, there are other funding sources available to you here, PG&E, programs, loans, personal assets, and then gifts and donations. On the logistical side, you're going to be, of course, there's the hassle factor. the delay factor, finding a replacement home, selling your lot, negotiating with your insurer. And moving on. I'm going to try to blast through here, keep you all awake. Emotional factors, obviously the attachment to the neighborhood, your neighbors, your friends, the community that has come together in such a strong way since the events in September. But then there is the trauma factor of being there and going back there. And then the idea for some people of a fresh start. We're not here to make decisions for you. We're just here to lay out some of the factors to consider. And then I'm going to briefly go through the insurance settlement points because we don't have anybody professional other than me. I'm an attorney and I am an insurance professional, but you've heard me talking a lot today, so I'm going to very briefly go through the factors to consider. We have a special law in California, a statute, that says that you can take your insurance settlement and you can use it to buy a replacement home, and you don't have to rebuild in order to get the maximum value from your policy. Question, can I buy another house and still get replacement value for what it would have cost to rebuild my own home with one of like kind and quality? Yes. According to the California Department of Insurance and the law, you are entitled to the full benefit of not just your coverage A, but also whatever extended coverage you may have. Right? And that's an important part. Next. Can I buy a cheaper replacement house and pocket the difference? No. Moving on. If I buy instead of rebuild, can insurers deduct the value of the land of my new home from my settlement? This is an open question, and this is something that we duked out for a couple years in San Diego after the last round of wildfires they had, and I think the bottom line is it's negotiable. In other words, you had your old lot, right? You had, and you're thinking, I just don't want to rebuild. The hassle factor, the delay factor, I'm out of here. I'm going to buy a new house. Well, what some insurers were saying in San Diego was, okay, so let's say we agreed it would have cost $500,000 to put back that house if you did rebuild, okay? So you've got $500,000 to work with. You had enough insurance, and there you go. You find another house, right? And it's $500,000. Well, the insurance company, some of them were saying, we're not paying you the $500 because we're going to deduct the value of the lot at that new house because we don't want you to be unjustly enriched with two lots when you only used to have one. I'm not going to get into the complications there. I honestly don't think you're going to have that problem here. I really don't. I think the main focus you should be making here is what's the better financial and emotional and logistical scenario for me? What do I want to do? Figure it out and make it happen. Okay, Scott Goldie is going to go through a few of the key points about the Value Assurance Program, which as I understand it is the main program relating to Rebuild or Buy. And take it away, Scott.
Great. Is this on? My name is Scott Goldie and my company is Brook Street, and we're a consultant to PG&E, specifically as it relates to the real estate issues that people face related to the incident that happened on September 9th. Our goal and a directive from PG&E is to work fairly and quickly to help people be able to make these very difficult decisions on what they may want to do with their property. Our programs are intended to work with and supplement your insurance coverage, and everyone has different insurance coverage, and we're getting into some of these discussions now. Our goal is to come in where they stop and bring it up to a level that's more than fair and helpful in you making these real estate decisions. To that end, we've established 4 programs for people to deal with the real property issues that are faced in this neighborhood. The first one is a purchase opportunity. If your house was destroyed or significantly damaged and you wish to move on, make that decision to move on, PG&E will purchase your property at the greater of the value of the property the day before the accident, or the amount of home mortgages you have on the property, whichever is greater. The insurance and mortgage debt would be deducted from that amount. In addition, PG&E would supplement your insurance coverage for temporary housing, for a lot of the incidental expenses that you face while you're going through this process. And this program is available for 3 years. So there's no rush to make a decision. There's a lot of emotional issues and impacts that you're going through. This program would be available to you for a 3-year period. If you choose to participate in this program and sell your property to PG&E, in addition to what I just mentioned, there would be a one-time payment of an additional $50,000 for participating in this program. If you make the decision, if your house was destroyed or significantly damaged, and you make the decision to rebuild, PG&E is also in a position to supplement beyond your insurance coverage up to the amount of money that it would take to rebuild a home of like quality and square footage on your property. In addition, they would provide money for hardscape and landscape to reestablish your property to as good or better condition than existed at the time of the accident. This is one that takes working with each person's individual insurance carrier and mortgage lenders to determine how that would work. But the idea is that would be a very generous per square foot number for soft costs and hard costs to allow you to rebuild that property at that location. This program is also available for a 3-year period. And this period that I'm speaking of will start when you receive the detailed program booklets outlining these programs. They were mailed last week, and people should start receiving them if they haven't already by early this week. If you participate in the rebuild program, in addition to what I just mentioned, you would also qualify for a one-time payment of $50,000. The next program that we have available for people in this neighborhood is the Value Assurance Plan. And if you choose to rebuild your property, if it was destroyed or significantly damaged, after a 1-year period, you would qualify for Value Insurance, which is a program that will be in place for 5 years starting from tomorrow. Value Assurance, what it does is guarantee that you will receive market value for your home. If there's any diminution associated with the explosion for that neighborhood, this program would bring you back up and make sure that you receive market value for your property. I'm going through these kind of in quickly. I'm available for questions also. We have an office established in San Bruno on Cherry Avenue. It's staffed full-time, and we're available at any time to answer detailed questions about these programs. This program, the Value Assurance Plan, as I mentioned, is available for 5 years. The last program I want to mention is the Neighborhood Restoration Plan, and this is for properties that were not destroyed or significantly damaged. PG&E is offering to pay for a 1-year period up to $10,000 for exterior home or landscaping improvements to help this neighborhood rebuild and help establish more quickly. Like I said, the Value Assurance Program starts tomorrow and will be available for 5 years. We have over 15 approved realtors on our list, and that list can be expanded if you have people that you know of that are familiar with these neighborhoods and want to be part of this program. We have nearly 10 approved appraisers. I think it's up to 10 now that are participating in the program. And again, we can add to that list if you have people that you've worked with and think should be part of this program. We've been meeting with local contractors to educate them on the rebuild and the neighborhood restoration plans. We've already met with over 20 families that have come to see us whose homes were either destroyed or significantly damaged. They're starting to consider their options on either rebuilding or selling their property to PG&E. I have business cards afterwards. You can come up, and it has my phone number and address on Cherry Avenue. Be more than happy to talk to you privately in more detail or answer questions you may have today. And if you would like to set up an appointment, you can do that either through your claims manager, your relationship manager, or by contacting us directly. That's all I had to start with.
Okay, thank you very much, Scott. I know that there probably will be a lot of questions. And it's great to know that you have that office. I did not know that, so folks can go there anytime. Annie, I think she goes by Annie, is a local, deep local. I think your family has been in the real estate business, as I understand, for quite some time in
Yeah,
this
I'd like to say
community.
I've been in it all my life.
Okay, well, thank you for coming, and you are one of the approved realtors, as I understand.
I am one of the approved realtors, and I thank you guys for this opportunity to speak to you. It's a little bit out of my box here. Usually we're here to make dreams come true, and it's kind of like we're here to maybe hopefully rebuild that dream. There is a consistent theme that I've been seeing, because I did have an opportunity to sit through the last workshop, and that's that every case is just so unique. And I think that that's so important that whenever you even go to buy a house for the first time or the last time, that everybody takes the time to really sit down and see what the needs are of that individual client. I want to stick a little bit to Amy's 3 points, and first being the financial aspect of whether you should rebuild or sell. And I think that if you read any different article that's out there on where the market is, you're going to find every single solitary person having a different view on it. The one person that I always have followed is with California Association of Realtors, Leslie Appleton Young. I know there's a lot of realtors out here, and they should be pretty familiar with her. She's predicting the market to pick up in our area, every area in California being different in the next 5 years. So I think in the process of thinking about rebuilding or selling, I think that would be something very valuable for you to think about. I have a lot of respect for her, and you can actually go on her the California Association of Realtors website and do some research on her. She's incredibly knowledgeable, and she's the chief economist for the state. The other thing financially that I think is unique to the situation is that we're in a 30-year low for interest rates. Now, granted, they've popped up a little bit, but if anybody's looking to move on or to sell and maybe take on a new mortgage, it's a good opportunity to, maybe get pre-approved somewhere where the rates are at a 30-year low. That's luckily on the in the stage that you're in. If you're thinking about buying, I think that you can possibly make better on what your mortgage is. I did get an opportunity to talk to a few people in the neighborhood that have been able to refinance and lower their interest rates with using comparable houses that have sold around the neighborhood. And I think probably for whoever is your realtor or whoever's going to be helping you through this process, whether it's to rebuild, get a mortgage, refinance, or to sell, I know that that's one of the greatest benefits that we have. Realtors don't always come by with the best reputation. Fortunately, Marshall Realty, where I come from, we have a great reputation, but we do have we are realtors with a higher code of ethics, of which we can actually use comparables outside the neighborhood, which we're very familiar with, to help with that. And appraisers they're calling us, your approved appraisers. We actually recommended them back and forth. And so we're all trying to work with this together to make sure that we can get the values to the house where it should be. I want to talk a little bit about logistics. And obviously, the time is for rebuilding is not always going to be the shortest as if you were able to purchase. Purchasing right now, another advantage, I'm trying to put the positive in this whole scenario here for you, is the market's full. So if you're out there and you're a buyer, it's a buyer's market. I mean, you can go out there and it wasn't like it was 7 years, 8 years ago, where we were scarce with inventory. We have inventory out there, and for the most part, I think that could be, with the rates and the inventory out there, it could be very positive if you were looking towards that move. And then lastly, I want to touch on the emotional part of it. And when Amy asked me to do this, well, I guess you got from Jackie Spear. I work with Jackie a lot in the real estate industry. But the emotional part of this, if you were to purchase or to sell, I looked at the title of the workshop, Rebuild or Sell, and I thought that really is house versus home. And everybody here with that unique story is thinking that, well, if it's a house and it's financial and it's to sell, it's, obvious. Whenever you can make a move and you can make a move up, it's going to be financially better for a house or an investment. But the rebuild, like Amy had mentioned before, is definitely the emotional part of your home. And when you buy a home, we sell homes, and the emotions are very, very abundant, very abundant. And I think that any realtor that's going to help you with that home rebuilding or that needing that appraisal or any of sort of that is so important that they realize what you're looking for. Are you looking as a financial move, or are you looking because, like Amy said, that the roots are there, your kids are in school there, or 2 years from now, are you going to be able to rebuild the house in time for them to make that move to the next school or wherever it is? And I think for the most part, our local realtors here in San Bruno are pretty in tune to that need. I am certainly, in fact, in tune to it, and I think that the way I would like to retitle this would be the house versus home, as far as the rebuild or the purchase. And the positive note is a lot of people don't have the opportunity to even think about maybe moving south. I heard a lot of people even know San Bruno is like such a great place to be. I've heard a lot of things that we can turn this and make this into a positive move for you. So I'm available for any questions as well if you want rates or appraisals or anything in terms of that. Our firm is available, and there's some other realtors from other places here. I see that as well. I want to just finish by saying our greatest benefit to you as realtors is when you do get it appraised, or even if you go to rebuild it, we know what sells a house. So when the appraiser comes out and it's your Crestmore home, it's either the split level or the rancher, we know that a swimming pool adds very little value, yet the hardwood floors add a lot of value, the double pane windows. So if you have those questions, or if you would like to see what in fact is valuable to a sale of a house, we'd be more than happy to help you with that as well.
Thank you, Annie. And just before we move on to the tax consequences, I've heard a lot of people expressing the concern, well, I'm interested in PG&E's programs, but I want to get an independent view because I just don't trust, their, no offense, their assessment of the value of my house. So what would your role be in that situation since you are on their approved list?
Well, whether it's PG&E or not, we base our comparable properties right out of a very simple multiple listing service, and all the appraisers use that. We use that when we put a price on a house, and PG&E is going to use it as well. The bottom line is that you don't have a lot of comparable sales directly in that neighborhood. So we've worked with the appraisers. I've done numerous amount of what we call comparable market analysis, and PG&E they've been working really very, very obliging with us. Everything we brought and we can add to, from what I gathered from being approved, they're gonna listen, right?
Yes, absolutely.
One of the little tricks that they told us is that the more detail that we can put in the listing, the better off we are. Now, obviously, some people don't have a house there, but if in fact there are houses that go on the market in the neighborhood, we're going to be very detail-oriented. We're going to say Italian, marble, bathroom, whatever it is. And, like you just had on the last workshop, if it's redwood versus fir, whatever it is, we're going to be very detail-oriented that because those kind of things people are attracted to.
Well, the money is in the details. I think
Yeah.
we can all conclude that from today. All right, well, great. Thank you for that perspective. Bob Castle is a very experienced CPA with a, I would almost have to say, a specialty in casualty tax loss issues. So I really appreciate him coming over the bridge today and speaking. And Bob, I know I did brief him a little on the particular issue that we talked about, that the open question with the IRS. But if you can just lead off, and I think
Yeah.
he has a
All right.
handout as well.
Can you hear me on this mic okay? All right. Yeah, give me that one.
You can actually take it out if you
It's
want.
not working.
Will it help you? It's working. Okay.
Okay. Yeah, no, there's no cord.
The other one, okay. Switch it.
Let's switch. There we go. Okay.
Does that work?
Okay, can you hear me now? All right. Thank you, Amy. All right. Ladies and gentlemen, I got to give you some news today that you may not like, but I got to give it to you. All right. I gave you a handout. I want you to turn to page 2 of this handout. I want you to look where I've drawn a little arrow here, because this may influence your decisions on whether you rebuild or not. This is the Internal Revenue Code. This is the law of the land as it sits right now today. Period in which property must be replaced. If you look at number 1, it says 2 years after the close of the first taxable year in which any part of the gain upon the conversion is realized. Okay? That's the key sentence. What they're saying to you is this. If you received money in 2010 from whatever source, be it PG&E, be it your insurance company, what have you, that is going to be part of the cost of your rebuilding, you have 2 years after the year, which means by December 31, 2012, you got to have your house rebuilt. If not, you stand liable for a potential that all your insurance proceeds become taxable income. Now, in all the question and answer stuff that I've seen PG&E hand out, that I've seen the IRS hand out, Amy, thank you for sending me over those questions. This is not mentioned. Now, in the Oakland Hills fire, we had a big difference. We had our disaster a federally declared disaster, and I wrote the tax law, which got this 2 changed to 4. So what you people have to look at, if you're going to rebuild, and you got to listen to Scott and listen to my real estate friends here about home versus house. If you're going to rebuild your home, you have to look and see, are you going to comply with the tax law? Will you make it by December 31, 2012 if you receive proceeds in 2010? That's a critical factor. It's critical because 2 years from now, the newspapers, the press will all have disappeared. You won't have the power with all the television cameras here today to record all this. IRS is going to come in and say, hi guys, you didn't make it in time. Your proceeds become taxable income. If you have more than a $500,000 gain on Section 121, you got to pay tax. So I want to bring that to your attention because that's one of the things that affects the tax law that's going to affect what you decide to do. Now, there are 2 other things I want to cover very quickly with you. On my list, and you can get these right off the internet, is IRS publications 584 and 523. 584 talks about the casualty loss disaster. Now, ladies and gentlemen, how many of you have taken an estimate of what your personal property loss is? Show of hands. Your personal property loss, the contents. You haven't gotten to content yet. Let me give you a tip. One of the things we learned in the Oakland Hills fire, ask your children what was in your house and what was missing. I'll tell you why I say that. One of my clients, I got his 6 daughters in my office one day. I said, okay guys, what are we missing? They came up with $80,000 of specific items that the parents had forgotten, but the kids remembered. So ask your kids, ask your relatives what goes on there. If you're going to sell your lot, if you're going to sell out, Scott, that's part of your program is the PG&E buyout, okay? If you're going to sell out, you'll come under Section 121. Section 121 says this: if you've been in the house more than 2 years, and it's your principal place of residence, you can take a $500,000 capital gain and pay no tax. But you have to determine what your basis was in the house. That basis does not include your personal property. Does not include your personal property. So you want to look at that thing. Now, what we learned in the Oakland Hills fire, there are some things that you're missing that you have to really get caught up on. Those of you who had wills, living trusts, where are those documents? They probably burned up in the fire. So you got to get them replaced. If you have life insurance policies, my friend Wayne Deutscher here tells me that you can contact your life insurance companies, and for $35 or $50, they'll send you a new copy of the policy. Is that correct, Wayne? Yeah. So you want to make sure you get those things replaced. Vehicle ownership, insurance policies, real property documents, and investment documents, stocks, bonds. If you held your certificates, contact the companies and tell them you lost your certificates in the fire. They'll replace them. Now, what you want to watch out for is this. You got a lot of vendors out there. A lot of people are going to say they got a deal for you. Where's our gentleman from the city of San Bruno? All right, I'm putting you on the hot seat. These people who decide they want to rebuild, in order for them to make it and satisfy the tax law, you have got to fast track them through the city. You can't take 6 months to approve their plans. They're going to give you plans on Monday, and 2 weeks from now, I want those plans out and approved, which means you guys got to get on the ball. Okay? You've got, okay, ladies and gentlemen, did you hear what he said? Did everybody hear what he said? Okay. What he said was they adopted a new, come on. Come on up here. Tell us what you did.
Most everyone here has already heard me say this, but the City Council has already adopted a new code to handle all the homes that were either damaged or destroyed by this, by cutting the approval times down and having an expedited permitting process, both on the architectural review side and the structural review side. So yes, you turn in plans, they're going to be done quickly. We already have a pretty quick process, but they'll be done even more quick than normal.
Okay, ladies and gentlemen, this is critical, because that's where you get tied up in not making your time frame. Pardon me. The other thing is, some of the contractors are out here, and it's great to see them all here. We had a lot of them here when the Oakland Hills fire happened. Go to a one-shop stop. Find a general contractor, like our friend that was just up here, where he can have your contractor, your soils engineer, your architect, your structural engineer, all fall under his domain, so they can shoot the whole program through in one shot. Now, one of the builders out there told me today, if we give them all the plans and you make all the decisions, you can get built within a year. The first question you want to ask your contractor is, how long is it going to take him to get your house built? And what you want to do is put in your contract, you got to be done by December 31, 2012, which means on December 30th, you move in, and on December 31st, you're sleeping in that house. That's where you put your head down on the pillow. If you don't, you got a tax problem. Now, when it comes to the personal property side of this, you can, because you're not declared as a federal disaster, you have to account for your personal property proceeds separately than you do for your real property proceeds. And that's what falls under the code here. Now, let me give you a suggestion that we gave to a lot of people in the Oakland Hills fire. How many of you have a frequent flyer miles credit card? Show of hands. Okay, ladies and gentlemen, you're going to be out buying all kinds of stuff. You're going to be buying all kinds of stuff. Let me tell you, one of my clients went first class to Europe for a month on frequent flyer miles after they rebuilt their house. Okay? It's a great way to keep track of what your expenditures are, and by the time you get through rebuilding, I know because I've done it, you need a vacation. You need a vacation. These are the things you got to watch out for in there. Amy, can we open it up for questions?
Yes, that's perfect. I was
Good.
just looking at the clock. All right, thank you so much, Bob, for your insights and expertise.
I know. Amy, one more second.
And for
You know,
scaring
folks,
everybody.
there's one more thing I want to do here. Good, you got TV camera going. Thank you very much. We got to give Amy Bach, and where's Bob? Bob, is Bob in here? Okay, we need
Oh,
to
with
give these.
rebuilding together.
Yeah, the rebuilding together. We got to give these folks a lot of credit. You know, these seminars don't come together just somebody makes a phone call and snaps their fingers. It takes a lot of work and a lot of patience. And Amy and her United Policyholders and Bob with rebuilding together deserve a lot of credit for you guys and a lot of thanks from you guys for putting these seminars together because it's a lot of work. And Amy, thank you for doing this.
Oh, you're welcome. Well, I appreciate that. It's very kind. And again, as I mentioned earlier, the funding for this program has been provided by a grant from both the Silicon Valley Community Foundation and the San Francisco Foundation. So we thank them. Okay, so I'm going to open it up to questions, and I would love the questions to include any future programs that you'd like to see us organize. As I mentioned, we will be doing another program on financial considerations with when the tax issues get clarified further, but we're very open to some other ideas. So questions, and we have, oh, sure, yeah. Great question. How many of you saw the article in the San Mateo Daily Journal? Show of hands. Okay, 1, 2. How many of you saw the postings on the listserv, the Glenview listserv? Okay. How many heard about it at the Glenview gathering yesterday for the first time? How many of you heard about it from your City of San Bruno liaison? Okay. Any, does that cover it? All right. Cable TV. Oh, on cable TV. You heard about it on cable. Oh, that's right. You guys, thank you. Thank you for that thought.
Kathy DeRenzi's email.
Oh, great. Okay, that's good to know. Any other sources of information that led you here today that we didn't mention? The telephone. Somebody called you. Yeah. Okay. Could have been me. Okay. Any questions? Oh. A flyer mailed from the city. Anything else? Okay, good. Well, we are really working hard to get the word out about these events, and I'm so pleased by the turnout. I was sweating about this. Okay, questions for our panel?
I have a question for Scott. If we choose to enter into the value assurance program, is that then considered a settlement with PG&E?
None of the real estate programs require it. And none of the real estate programs require a settlement with PG&E.
I'd like to know if you're under Prop 13 presently, which I am in my property, what counties are remaining that are acknowledging Prop 13 for your tax base, your real estate taxes?
Property tax?
Property tax.
Actually, it does change every so often, so that you'd have to go to the website, and we have reciprocal counties that you can find out will take ours.
Because I understand there are only 4 now remaining in the state.
That sounds right.
San Mateo being one of them, right?
Correct, but you have to find out who will reciprocate with us.
Okay.
Which county will reciprocate?
Thank you.
I see another hand up here. Oh, Bob's got it.
Let's make something very clear here. Unless things have changed since I was a kid, San Bruno is within San Mateo County. Okay, right. So if you move out of the county, you're going to have to find out whether that county will accept it. Okay, so if you go to reciprocal, and there's only 4 that do. Okay.
You take your 69 and 30.
I have a tax question. Well, actually, I probably have 2. One is you had pointed out this 2-year clause here. If you did not receive money last year, but you will receive money this year, that extends to the December 31st of whatever the tax year is, or is it 2 years from the date you receive funds?
Okay, let's do this again. It's 2 years after the year in which you receive proceeds.
Okay.
So if you receive proceeds in 2011, which hopefully you did, and you received nothing in 2010, you have until 2013 to be completed.
Okay.
You pick up that whole extra year by not taking the money in
Okay.
2010.
And my other
Yeah.
question is, if I am not the homeowner, but I am a survivor, a surviving family member that's administrating that property, and I'm receiving that money into the estate, as opposed to for my own self to rebuild my own home, which I'm not, is there any difference in how that money is handled if it's going into an estate?
I think IRS will probably recognize as being the same. In other words, I'm making an assumption here. Your parents, who's asking the question?
My mother
okay.
died in the fire.
Your mother died in the fire. Okay. You will fall under 1033 because it was her principal place of residence.
Yes,
You're
it was.
handling this as the administrator of her estate. Yeah, you'll fall under 1033.
Thank you.
Good.
This is a question for Annie. What source is the best source to find out what our original square footage of our house is?
Aaron? Well, the county record, the county records are probably the most populated source, but yet, go ahead, Aaron.
Yeah, I'd say, the county has records, and for the most part, they're fairly accurate. I would check to see, make sure if you look back and you notice, hey, I did an addition 10 years ago, and that doesn't reflect what was there, to take a look at our city records to see, the exact square footage that you added. We base most of our records off the county records as well, plus whatever we have in permits.
I might add that you don't have to go down to the county. If it is on record, we have sources for you. We can pull it up pretty quickly if you want us to check that for you.
And you could call my office as well too, and we have access to the county records as well.
Oh, sorry.
Is the Proposition 13 program based on the square footage or the value of the house if you're going to transfer it to a different location?
Prop 13 was established in 1978, and it's based on the sales price. So if it's been transferred in a sale, that it's one and any bonds and assessments per year of the sales price. So when did you purchase your house?
42 years ago.
So your taxes have only gone up every so often. I mean, they can go up a certain percentage every year, but they're established at that point. If you do a remodel, and
I'm thinking if we do a buyout and we move to a different location, how is the Proposition 13 value
that would be a different
taken
prop.
over?
That would be a different proposition, and that was what the gentleman behind you was talking about. You can take your taxes with you one time, and that is an age factor, and we can give you the details on that too.
Thank you. Well, I think we're going to stick to our schedule. If there are any more questions, I'm sure the panelists will be happy to answer them out in the hall. But I want to, again, thank Rebuilding Together Peninsula for being fabulous partners in the event. And it's just, we have a whole mutual admiration society going. Last chance for a raffle entry. If you didn't get a ticket for this fourth and final workshop, raise your hand. Otherwise, we were going to do the final drawing, and Carrie, I want to thank our generous vendors.
Yes, thank you. So Lindell Homes has been out in the room. A lot of the vendors are closing up, but if you do get a chance, some of them are still around. Lindell Homes has given a bottle of wine. Thought you all might need it at the end of today. So 183 is the last three. Is that anybody? Nope. Okay, great. 183. The next thing is from Mr. Roofing. Mr. Roofing is right over in South San Francisco, and they have Warriors tickets as well as a parking permit to go with it. So really? Okay. So this is for